And welcome everybody to another Smart Money Circle show. I'm Adam Sarhan. With me today is Cole Wilcox, who's the founder, CIO of Longboard Asset Management, runs a mutual fund. Ticker symbol is LONGX. Cole, thank you so much for taking the time and welcome to the Smart Money Circle.
Thanks for having me, Adam.
So Cole, I know you wrote an influential paper back in 2005. It's called Trend Following for Stocks. I want to speak about that and a lot more. But before we do that, I always like to ask, can you tell us your story and how you got to where you are today, please?
Sure. It started 30 years ago. I actually came into the industry as a stockbroker, of all things that you can imagine doing. I quickly kind of realized, that maybe stockbroking wasn't the best career path, but I did see what doesn't work on Wall Street as a stockbroker. There was a famous book years ago called "Where Are the Customers' Yachts?" And I think that's a pretty good book and a pretty good explanation of retail stockbroking. Through that process, though, you kind of learn, what doesn't work. And Charlie Munger, a great mentor of mine, has this quote of saying, "Always invert." So if you find something that doesn't work, what's the opposite of that? And started to dig and investigate into strategies that might succeed on Wall Street. And that's where I spent the bulk of my career doing research and trying to find repeatable processes that would work over time that were also, you could research it and validate and get empirical evidence to say, hey, this isn't just a old wives' tale. It's actually math and science behind it. So that's my initial entry into the biz.
I love that. So I started off as a Series 7 broker as well, and I quickly pivoted because I said this doesn't work, and
It definitely doesn't work.
fully understand where you're coming from. So I noticed that you have my book behind you, Psychological Analysis. I know that you are big on psychology, and you created these, I guess, empirical ways of investing, and that led you to researching trend following and trend following for stocks specifically. Can you speak about that journey, how you were in that broker world, and how did you get out of that, and what lessons did you learn?
So the thing that I saw in the broker world is that humans tend to just be their own worst enemy, right? It wasn't that you couldn't find good ideas as much as it was your own psychological biases would lead to choices and behaviors that were just counterproductive to being, successful. I've always made the argument that, Warren Buffett and Charlie Munger have run, this amazing compounding machine for a long time, but it's not because they're the world's best stock pickers. They're the world's best stock holders. So the ability to overcome these biases and maintain discipline and allow the markets to, do the job for them and collect years of compounding of great investments and to just not screw it up. And so that was something that I said, well, if humans are biased and behavior is kind of the issue, could you create systems and processes that would counteract human biases so that you could maintain discipline and let the markets do their natural work for you and kind of eliminate or at least reduce the unforced errors of human behavior? And that's what led me to want to get involved in more systematic, rules-based discipline processes, not just the back testing and knowing that something actually works, but the ability to have a process in place that would overcome, the human behavior part of it. So it worked in the real world, not just on paper.
No, I love that. So let's talk about your investment strategy, please. Can you explain to the audience what you do at Longboard and how it works?
Yeah. So my background is in after the stockbroker side of it, I pivoted into the hedge fund world and initially did investing with managers who ran macro investment funds or managed futures, systematic, CTA style things. So trend following and the methodology of trend following, which is profiled kind of in your book, is my core investment, philosophy. So you have a quote that says, "Make the trend your friend," which I agree with. But it's really just a way to position yourself in a way to cut your losers, right, and hold on to your winners. And that is when you kind of break down, like the research that we did and other people, have done. There's a very small minority of stocks. There's a famous paper written by Hendrick Bessembinder. Our research is also cited in the front cover of this paper. Very small minority of stocks are responsible for generating all of the market's, returns. I think 4% of companies that have ever gone public are responsible for 100% of the wealth accumulation, and the other, 95 or 96% just are nothing. And so that old adage, that 90% of stuff is crap is true, and that is kind of where we apply trend following to filter out the crap and hold on to that 10% that actually is really moving, the needle in the markets. And that classic trend following approach is really what our core DNA is.
I love it. And then you were able to take it from traditionally trend following was commodities, currencies, macro, like you had said, but apply it to stocks. And that's something that very few people have been able to do successfully. How can you speak to that a little bit to the audience and educate them on how you were able to do that?
Yeah. I don't know why other people aren't able to do it, successfully, to be honest. I mean, these observations are out there. It's quite clear that it, works successfully. I mean, you have to have a process in place, and then you have to just execute it with discipline. I think that we've had success with it because we've been able to marry the two together, not just have a robust strategy that is effective and works, which is actually not that hard to do. But the ability to apply it for now, what is 2 decades, and to take all of those trades, to maintain discipline, and through the ups and downs and inevitable periods that you have to, maintain that, I think is what separates us. But I think that's what separates any investor who is able to go from, above average results. You have to do something better and more sustainably than other market participants have been able to do. So maybe just the temperament of the firm and our belief in what it is, and being okay, with having like realistic expectations around what we're trying to accomplish.
No, I love that. So you're not really trading in a get in, get out, get in, get out type of sense. You're more applying that longer term investing approach with a trend following overlay, if you will, or
Yes,
marrying those.
I would say, it's definitely not market timing, right? You make money time in the market. And it's about making sure that you have an investment process that can filter out the vast majority of just very mediocre to bad investments, and concentrate in still a diversified portfolio. I mean, we own hundreds of securities in our portfolio, but out of a universe of thousands, right? So we really want to concentrate the portfolio, let the cream rise to the top, own the market leaders, and just in a very ruthless way cut the market losers, and just have that process you repeat year in and year out, quarter in and quarter out, manage the downside risk, while at the same time positioning yourself for the upside that happens over time.
So you mentioned that, are you using fundamental criteria, or is it just price performance criteria, or is it some combination thereof to figure out the top 10% versus all the other stuff that's not good?
For us, it's price trends, right? So the inputs that go into our strategy are just simply ranking stocks by performance,
Okay.
and maintaining discipline, rules-based strategies, stop losses behind all of our positions, appropriate risk allocation across those. We're not a concentrated manager. We have small bets on lots and lots of different things. But the fundamental side of it, like the stock market is ultimately price is what you pay, value is what you get. Or as Warren Buffett, would say, in the short term, things are a voting machine. In the long run, they're a weighing machine. So the reason you make money in the stock market is there's more aggregate wealth that's created inside of these companies, and shareholder wealth, and where it kind of comes from. It's not from trading. It's from the economic productivity of these businesses and competition and things being successful that manifest themselves in long-term trends in markets of the book values going up, earnings going up, and companies actually being successful in their industry and categories.
Got it. No, that makes perfect sense. So let's talk about risk, since you mentioned risk as well. First off, how do you handle risk? And then what are some mistakes you see people make with respect to risk management?
So risk management is like the most important part of any great, kind of investment strategy over time, and appropriately, bet sizing, your books. I actually have a book back here called The Missing Billionaires, which is a new book. It's quite fantastic. And most of the book is focused on bet sizing and the implications of inappropriately bet sizing. If you
Oh,
have a positive edge and you've got something that works, if you overbet it, you're gonna blow up and ultimately take something where you should win, but you turn it into failure. And so bet sizing and managing the downside risk is actually the most important part of what it is that we do. We're very much a defense wins championships philosophy. We're very much a focus on the downside risk mitigation, and it makes it a lot easier on the returns that you have to make on the upside, kind of over time. And we're focused on compounding wealth over the long term. And in order to do that, minimizing drawdowns, minimizing losses while still positioning yourself to maximize the upside is very much in line with how we think about the world and what I think leads to a sustainable, durable, successful investment process.
I love it. So before we go further, tell us a little bit more about Longboard Funds and what you do and the work you do with financial advisors, please.
So our business is really solely focused on financial advisors. These would be financial advisors that are in maybe 100 million of discretionary assets to 2 billion. It's probably like our sweet spot. They could be custodying with Schwab and on the independent SEC side or inside of a brokerage firm. The people that we identify with, and I would say our tribe for investing, with Longboard, are very much pro alternatives and alternative investment styles and strategies. They're looking for downside risk mitigation. They're looking for new ways of diversifying and not just being completely reliant on long only stocks and bonds. They care about risk management, but they also care about maximizing, returns. Right, we're still in it to make money and be successful. Our approach isn't really to pitch a fund. It's not to say we have a fund that's the end all be all perfect solution to everybody's needs. We help consult with financial advisors to build kind of all weather portfolios that use our fund combined with other practitioners in the marketplace. We don't see other managers who run funds as competitive. We see them as part of an ecosystem and a way for us to create compelling solutions for financial advisors where we have a domain expertise in this area and we can help them make the best decisions in kind of an unbiased way. We found that that's really the best way to approach the marketplace.
I love it. No, sounds great. How about some timeless lessons that you'd like to share with the audience that you've learned along the way?
Well, I have a lot of timeless lessons, but one of them would be probably the biggest investment mistakes that I've made personally or other kinds of things. The most disastrous investment I ever made was deviating from investing in U.S. equities.
Okay.
I had a brief idea that I found this value stock for myself personally, and it was in Russia, and it was this company called Gazprom, and it was trading at a PE of 2.
Okay.
And it seems so super cheap, and it was like a no-brainer. But the reality is, this is maybe 20 years ago. You need to be in business with people who are ethical. If you're going to be a minority shareholder, you have to be on the same side of the table with everybody. I find that that's easier to do in the United States. The governance, the rules, the regulations to be a minority shareholder is really the safest place, to be. And that's why we are very much biased in our own investment fund to focus on. There's plenty of places to make money in the United States. There's over 3,000 publicly traded companies here. There's no need for us to deviate into small emerging markets to find opportunities that seem maybe good on paper with the math, but there's other gotcha moments that may exist in these areas, asset stripping, et cetera. So that was my very expensive education lesson in investing in Russia.
Yeah, no, listen, tuition. We've all paid our market tuition, those expensive. The good news is that you learned from that lesson and you didn't repeat it. Most
Yeah.
people unfortunately repeat it. So that's
And
the
I
time.
try to transition that knowledge onto, other people, right? Like learn from my mistakes. It's
So,
cheaper that way.
yeah, they say a wise man learns from his mistakes, a wiser man learns from other people's mistakes.
This is very true.
In this case, yeah. Okay, beautiful. That's timeless lessons and mistakes. Anything else that you want to add to those two before we move forward?
No, I think the other one, is, that the biggest lesson is to fail forward. As an investor, nobody's perfect. We make mistakes, right? We're just in a process of failing forward. And so, but to write down your mistakes, right, to evaluate them, to do postmortems on them, to understand them so that you don't make the same mistakes over and over again. And I think there's a lot of value in case studies of your own mistakes, case studies and other people's mistakes, and then just seeking to invert and do the opposite of that.
Got it. No, I love that. Makes perfect sense. So, what's the best piece of advice you'd like to give the audience or give your 30-year-old self?
Ooh, my 30-year-old self. I think that because the investing part of it is so much temperament and psychology and other kinds of stuff, and just life in general. I read this really fantastic book called No Mud, No Lotus. And it's actually has nothing to do with investing. It's written by a Vietnamese Buddhist monk. But the philosophy of it was really a framework for being able to calm the mind and to deal, not to eliminate suffering from life. You're not going to eliminate suffering. And suffering happens in investing. There's drawdowns, there's pain associated with that. You've lost money, you've made a mistake, there's
Right.
volatility, there's envy on the upside of like people are making money and you're not. There's all of these things you have to deal with, and how you deal with that suffering determines whether or not you're going to have good results or bad results. If you deal with it poorly, you're going to get very bad results. If you deal with it better, you're going to have much better results. And I think the philosophy of just acceptance that suffering is a thing that you're not going to avoid, you just have to learn how to suffer better. And there's a lot of suffering in investing. So learn how to suffer better and make better decisions off of it is kind of my big takeaway.
No, I love that. That is so powerful because it applies to all areas of life, not just investing.
It does.
Yeah, beautiful. Well, Cole, thank you so much for taking the time today. What is the best way for people to get in touch with you or learn more about Longboard?
Two areas. You can go to our website, www.longboardfunds.com, or I'm on Twitter, or not, excuse me, not Twitter, on LinkedIn. And so you can find me on LinkedIn, follow me, see the stuff there, as well as the other stuff from members of our firm. We try to put out a lot of different content and do a lot of knowledge sharing. So
Beautiful. Well, thank you so much, Cole. Hopefully we'll have you on again soon. This was fantastic.
appreciate it. Thank you, Adam.